there, Singaporean investors. If you're keenly interested in Lum Chang Creations and wondering whether to buy more of the stock or perhaps even consider selling it right now, you are absolutely in the right place. I'm Iggy from the Investing Iguana, and in this video, I will provide you with a candid, balanced breakdown focusing on 3 compelling good points that make this stock attractive, and then, just as crucially, 3 significant bad points or red flags you absolutely need to be aware of. Make sure to stick with me all the way to the end, because in the final segment, I will give you my personal investment advice on whether to buy, sell, or hold this particular stock for your portfolio. The Investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers. We've crossed the 1 million mark for reads, and with over 900 videos and 500,000 watch hours, content is literally all I do. I also focus on regional and global economic trends, giving you that broader context. If you're serious about uncovering the hidden gems and potential pitfalls in the Singapore market, you'll want to hear this. Let's kick things off with the positives. For Lum Chang Creations, one of the most compelling strengths we've identified is its explosive debut performance and incredible investor demand. Think about it. In Singapore, strong market reception often translates to sustained interest, especially for specialized companies. This company just made its Catalyst debut today, July 21st, opening at 30 cents per share, representing a 20% jump from its IPO price of 25 cents. We've seen this incredible demand play out in the subscription numbers, with the 1 million public offer shares being oversubscribed by 47.3 times. That means for every share available to retail investors, 47 people wanted to buy it. This extraordinary demand provides strong validation from the market, but is it enough to guarantee future success? Moving on to our second good point, its dominant position as an urban revitalization specialist with substantial project backlog. For many Singaporean investors, visibility is key, and this company has delivered with an order book worth 122.8 million Singapore dollars, representing approximately 3 times annual revenue. This isn't just about backlog, it reflects the company's specialized expertise in heritage conservation work that creates high barriers to entry. Consider how LCC's track record includes prestigious projects like St. James Power Station, Red Cross House, and restoring the National Museum building facade. These aren't ordinary construction jobs, they're showcase projects that demonstrate LCC's capability to handle Singapore's most prestigious conservation work. It's certainly a comforting competitive moat in today's volatile market, isn't it? And finally, the third positive aspect worth highlighting for Lum Chang Creations is its commitment to rewarding shareholders through dividends and strong parent company backing. It's not just about what a company promises now, but what financial support it has for tomorrow. This company has strategically positioned itself with Lum Chang Holdings retaining a 71.1% stake after today's IPO, providing strong backing and expertise. The management has committed to paying out at least 30% of net profit as dividends for the financial years ending June 30th, 2025 and 2026. This dividend commitment, combined with the 8.75 million Singapore dollars raised from new shares to expand operational capacity, creates a solid foundation for growth. Are these ambitious dividend commitments truly sustainable, or are they just optimistic projections? We'll dig deeper into that. Now, let's turn our attention to the flip side. The 3 critical red flags you need to consider before making any investment decisions on Lum Chang Creations. The first significant concern is its complete dependence on Singapore's domestic market. While growth is good, geographic concentration can be a serious burden. LCC operates entirely within Singapore's construction industry, which remains highly cyclical and vulnerable to economic downturns, policy changes, and shifts in government spending priorities. This could impact its ability to maintain growth momentum if Singapore's construction sector experiences a downturn. The parent company, Lum Chang Holdings, provides a cautionary tale, having experienced significant volatility in recent years due to challenging market conditions. How much geographic concentration is too much? And at what point does it become a real threat to shareholder value? Our second red flag is the structural limitations and market perception issues associated with its Catalyst listing. Even strong companies can be held back by market dynamics. We've seen historical data showing that since 2008, only 21 Catalyst companies have successfully transferred to the main board, while 24 companies actually moved down from the main board to Catalyst since 2014. This track record could limit institutional support and affect long-term growth potential, potentially restricting the stock's ability to attract broader investor interest and achieve premium valuations. It's a classic case of being constrained by the smaller pond. Will LCC be able to overcome these structural headwinds? For even more granular data, in-depth charts, and a full written breakdown of Lum Chang Creations' financials and strategic outlook, make sure to check out our Substack. The link is right there in the description. Finally, the third major concern for Lum Chang Creations is significant execution risk in scaling operations despite ambitious expansion plans. Diversification isn't just for portfolios, it's vital for operational capability too. The company raised 12.25 million Singapore dollars in gross proceeds from the IPO primarily to expand operational capacity and strengthen urban revitalization capabilities. But scaling operations and construction requires significant expertise in project management, quality control, and skilled craftsmen. This execution challenge is something Singaporean investors, who often seek stability, must seriously consider. What happens if LCC can't effectively manage rapid growth, or if skilled labor shortages impact project delivery timelines? These are the questions that keep seasoned investors up at night. All right, we've weighed the good against the bad for Lum Chang Creations. We've looked at its explosive market debut and incredible investor demand, its dominant position as an urban revitalization specialist with substantial project backlog, and its dividend commitment with strong parent company backing. But we've also squarely faced the challenges: the complete geographic concentration risk, catalyst listing structural limitations, and the execution challenges in operational scaling. So, what's my overall assessment for Lum Chang Creations? This is a company with exceptional market reception and impressive specialization, but it's currently navigating structural challenges that demand careful consideration. Considering all these factors, my personal rating for Lum Chang Creations is a cautious buy with strategic entry points. My clear justification for this is that despite the strong first-day performance where shares jumped 20% to 30 cents, the combination of specialized market positioning, substantial order book, and strong parent company support creates an interesting opportunity for patient investors. However, the geographic concentration risk and catalyst listing limitations require careful position management. For Singaporean investors, my strategic advice is this. For new investors, consider establishing small positions if shares pull back toward the 28 to 30 cent range, which would provide attractive entry points while still offering potential upside. For existing IPO participants who bought at 25 cents, hold positions but consider taking some profits if shares move significantly higher in the near term. However, limit exposure to 2 to 3% of portfolio given single market concentration risk and catalyst listing considerations. Set stop loss levels around 22 cents to protect against sector-wide downturns, and maintain flexibility to add positions during broader market weakness. Is it a good fit for your CPF portfolio? Potentially, but only if you can accept the geographic concentration risk and have patience for Singapore's urban revitalization story to continue unfolding. Key catalysts to monitor include quarterly results that track revenue recognition from the 122.8 million Singapore dollar order book, new contract wins, particularly major government heritage conservation projects, concrete progress on any regional expansion plans mentioned by management, and actual dividend payout ratios meeting the promised minimum 30% of net profit for 2025 and 2026. So we've broken down Lum Chang Creations piece by piece, looking at its strengths and weaknesses, and I've given you my personal verdict and strategy advice. If you found this level of in-depth, actionable analysis truly valuable, please give this video a like, share it with fellow investors, and subscribe to the Investing Iguana channel so you don't miss our future deep dives. And for those who want to be truly ahead, our premium members gain exclusive early access to all our videos, often a full week before anyone else sees them. This means you get Iggy's detailed analyses and urgent insights on major market moves directly to your inbox, giving you a significant head start. It's just $1 a month, less than a cup of coffee. Think of it as your consistent daily dose of financial fuel for smarter decisions delivered before the masses. Ready to join the inner circle and get that early edge? Just click the link in the description below to become a premium member today.